Hello, everyone, and welcome. Thank you for joining me here in my webinar presentation about buying your first home. Uh, a step-by-step guide to buying your first home. And my goal here is to just go through this and answer most of the primary questions that most folks have when they're looking to purchase their first home. So get out your notepad, take some notes, and then you'll have um, an opportunity here at the end to sign up where you can join me for a consultation. Basically, you just go to my calendar. It's consultwithbruce.com. That's consultwithbruce.com, where you'll schedule that free consultation with me. We'll go over programs and answer any questions you may have after seeing this presentation. So a little bit about me before we get started. My name is Bruce Cline. I own Gulf Coast Home Loans. I'm licensed in Texas, California, and Florida, doing most of my work here in Texas. And I am also partnered with NEXA Mortgage. Now, through NEXA, it allows me to partner with over 250 lenders nationwide. And that just means that I've got multitudes of opportunities for home buyers. There's over 2,000 different down payment assisted loan programs nationwide. And by partnering here with all these lenders through NEXA Mortgage, it allows me to bring the best programs to you and often at wholesale rates to help you find the best deal. So I'm going to be going through this with you and using my knowledge and my experience that I've had over recent years of working with first-time home buyers. And my goal is to make this a smooth and successful home buying journey for each of you. In full transparency, I want to go over the best opportunities for you, the different programs for you, so you can make an informed decision and know before you buy your home that you're making the best decision for you and your family. So let's get started. Let's talk about understanding the home buying process. Basically, we're going to have 5 simple steps. Let's talk about that first step, getting pre-approved, and why is it important? Okay, so first thing to note about getting pre-approved is if you're contacting a realtor, you find a home, you want to go look at it, and you reach out to the realtor who's on Zillow or wherever you see it, you call them and say, hey, I want to come see this home. The first question they're going to ask is, great, are you pre-qualified? Do you have a pre-approval letter from a lender? So that's why you want to get with me. And we're going to go through your budget. We're going to help you have a clear budget to help you understand how much home you can afford. And this is going to give you an edge when you're out making offers on homes. I'm going to collect the necessary documents to determine your eligibility and show you how much home you can afford. So again, you've got to get pre-approved first. Then you go to step 2, and that is searching for your home. Now, once we get you pre-qualified, we're going to get that letter to your realtor. If you don't know a realtor in your area, I can help you with that. I can make a recommendation. But listen, partnering with a realtor who comprehends your market can simplify a home searching journey. Now, not only is it going to simplify it, I can't overemphasize the importance of having a qualified, knowledgeable, experienced realtor who knows your area, knows your demographics, knows all the recent sales in that area, because that realtor is going to help you determine how much you need to offer for that home. And you want your offer to be accepted, so it has to be a reasonable offer, and that realtor is going to help you get that number. Okay, so after we have you pre-qualified, you go to step 2. You get with your realtor, and the realtor is going to get a list of homes that meet your criteria because we've already set your budget. We know how much home you can afford. Now you get with your realtor, start searching for a home. Then you find the home. You want to make an offer. This is also where having an excellent realtor is so important. You got to know how much to offer for the home. Okay, we've already determined your budget. We know how much you can offer and how much you shouldn't go over. All right, so this qualified realtor is going to handle negotiations, the offer, any contingencies. So there's going to be an inspection on the home. Okay, after you go under contract, there'll be an inspection. They may come back with a list of items that need to be repaired. The inspector says you need, this and this and this need to be repaired. And now your realtor will go in and negotiate with the other realtor. Say, hey, my buyers want you to fix these items before they'll go through with the purchase. And sometimes they'll fix it, or they might just lower their price. And that's all part of that negotiation and why that realtor is so important. Again, I can help you with that if you don't know someone in the area. Now, after you made that offer, okay, your realtor is going to send the contract over to me, and then my team is going to consist of myself and a processor and an underwriter. So I've already gathered the documents up front to get you pre-approved, but the loan processor is going to want some additional documents and the most recent documents, because it could have been 6 weeks ago when I gathered your documents, and now you've made an offer 6 weeks later. Processor is going to need to get the most recent bank statements, the most recent pay stubs, etc. So he or she will be reaching out to you as well. I'm your point of contact from your application to your closing, but the processor is going to jump in there and reach out and say, hey, send me your most recent pay stub, send me your most recent bank statement, whatever is required to get your loan in front of the underwriter. Once he or she has all of those documents that are needed, your loan gets submitted to the underwriter. The underwriter reviews it pretty quickly, usually within 24 to 48 hours, and gives a conditional approval. All right, based on all the information I have here, this loan is approvable. However, conditional, that means go and meet these conditions. I want you to verify the bank statement that the funds that we have on this date, those funds are still there. Verify the employment, that they're still employed with this company, that they, haven't taken a pay decrease, things like that. So those conditions are going to come back from the underwriter. The processor will meet the conditions and then resubmit it for final approval. The underwriter sees the conditions comes in, checks all the boxes. Now we've got your loan fully approved. The underwriter stamps it, it's approved. It goes over for closing. At that point, it's going to go to our closing team and the title company. Our closing team is going to be in discussions with your title company where the closing is going to take place. They're going to be matching all the numbers in the documents. The title company is going to prepare all of the documents that you need to sign at closing. Now, I'll help you get in touch with the title company and get your closing scheduled, and they will let you know what documents you need to bring to closing, your driver's license, and how they want the funds there at closing, if they want the money wired, if they want you to bring a cashier's check, etc. They'll go over that with you. So you'll do the final walkthrough, you'll go to your signing, you'll sign the documents, and they're going to give you the keys to your new home. Congratulations. So see, 5 easy steps. That's what we're going to do to get you in your new home. Now, let's talk about the options that are available for home buyers. Basically, there's 5 major programs. We're not going to talk about any of the non-qualified mortgage, different options that are out there. These are the 5 major ones, and primarily we're going to be talking about conventional and FHA. You also have VA, USDA, and jumbo loans. But primarily for the purpose of this webinar, we're talking about conventional and FHA. Conventional loan is ideal for buyers with good credit, stable income, and the down payments can be as low as 3% for a first-time home buyer. Now, a first-time home buyer is considered anyone who's not owned a home in the past 3 years. So it doesn't mean you've never owned a home. You just can't have owned a home in the past 3 years, and that makes you a first-time home buyer. Now, on the FHA loans are backed by the Federal Housing Administration. These have more flexible credit and down payment requirements. The credit, if you've got some issues with your credit score, this is the loan that's going to be best for you. Again, we're going to look at your overall situation and help determine which program is right for you. Most of the down payment assistance loans are going to be FHA. Then you have the veterans loan, the VA. That's for active military or veterans who are retired from the military. Those are 0 down loans. Great loan programs if you or your spouse happens to be a veteran. USDA, these loans are in rural areas. So out in the rural areas, you may be in a rural area, and we can look up the address of the home that you're thinking of purchasing to see if it qualifies for the USDA loan program. That's a zero down program as well. Now, it is a government program, but it's a little more difficult to qualify than it would be for the FHA loan. Credit requirements are a bit higher, and there's some requirements regarding income and income limits and things like that that make the USDA a little bit more challenging. But we'll look at all the programs. We're not going to talk about jumbo loan programs here since we're talking about first-time home buyers, but there are loan programs out there for those higher priced homes. Once you move up, after you've been in this home, you move up, maybe your third or fourth home, you'll be into a jumbo loan. All right. Now, let's talk about the special programs and incentives that are out there for first-time home buyers. So you have zero down programs and low down payment options. They do exist. Zero down, it is actually there. It's important to note, though, when you see zero down, that doesn't mean you're bringing zero, because you have something called closing costs that are independent of down payment. I'll go over that in another slide here shortly. So zero down payment programs and low down payment options allow first-time home buyers to purchase a home with little or no money down, which significantly reduces the upfront cost of buying a home. Makes it very affordable. Then we have the down payment assistance, what that we'll refer to as DPAs, and grant programs. Listen, there are over 2,000 DPA programs and grants available nationally. And most of these can be accessed through Gulf Coast Home Loans, NEXA Mortgage, and they provide funds for down payment and or closing costs. Then you also have state-specific incentives. In Texas, you've got several different state programs, TDHCA, SETH, TSHAC. These are the ones that most people have heard about, but there's so many others that I have access to through the 250 different lending partners who offer DPA programs that aren't state specific. But on these state specific, you also have counties. Different counties have different programs and grants. So we'll be looking at that. I'll see where you're going to be buying a home. We'll look to see what the best programs are for you, and you'll be able to go over all those and see which one is right for you and your family. Now, back on the pre-approval, the importance of the pre-approval. First of all, it demonstrates that you're a serious buyer. Okay, if you come in and you've got a nice pre-approval letter from a lender that says, we've evaluated your credit, we have looked at your income, we've looked at your bank statements, that shows the seller that you're a serious buyer. You want to have that. And again, a realtor is not going to make an offer on a home unless you have that pre-approval letter. Now, also that pre-approval process that you'll do with me in our loan consultation, it's going to help you set your budget, because I'm going to go through all of your income and your debts, and we're going to determine how much you can afford, okay, based on what the potential monthly payments and upfront costs are going to be, including taxes and insurance. That's going to help us set your budget. It's also going to strengthen your offer. It puts you in a better negotiating position. When you have a solid pre-approval, you have that letter, you're a serious buyer. It just makes your offer much stronger. And for you, it provides clarity. It allows you to focus your home search on properties within your pre-approved budget. We've determined how much you can spend on this home. So your mind can be at ease when you're searching for these homes, because your realtor is going to find homes that match your budget and match, what the style of home, et cetera, what you've told your realtor to be looking for. And it's going to expedite the buying process. So what you don't want to do is be out driving and looking at open houses on the weekend without a pre-approval. And I'll tell you why, because you're going to walk into a home and you're going to go, oh my gosh, this has everything it checks every box. It's everything we wanted in a home. We got to make an offer. And there are people in that home that weekend that already had their pre-approval letter in hand, and they're making offers, but you're not pre-approved. Now you got to call me on Monday, and then we've got to gather all the documents. And by the time we get your pre-approval done, that home might already be under contract. Okay, so this is why it's important to get pre-approved even well in advance. You're going to know your budget. You're pre-approved. Now you find that home. You come across this home. It just goes on the market and it checks all your boxes. You're approved. You're ready to make an offer. You don't have to wait several days to get, all the boxes checked so that you're pre-approved. So get started. Get pre-approved. Now let's talk about finding the right mortgage for your needs. Okay, we're going to discuss credit, income, and your monthly debt to determine your qualifying debt to income ratio. So we're going to look at your credit score. That usually you hear is the middle score of the three. You've got the three bureaus that are reporting your score. We use the middle score for qualifying. If you have two borrowers on there, we're going to use the lowest middle score for qualifying. And then I mentioned how we're going to determine your debt to income ratio, looking at your debts, looking at your new home payment. And then we're going to look at that monthly income, work that up, and I'll know your qualifying ratio. And you're going to see exactly how much you're going to be paying monthly on that mortgage payment, along with what your other monthly mortgage, not your mortgage debts, but your other monthly debts. So it'll help you make a really educated decision before you decide to go under contract. Now let's demystify the down payment and closing costs. So you probably I still hear 20%. You need 20% down. That's not true. It's not true. It's not been true. It's just when you put 20% down, it eliminates the need for the monthly mortgage insurance premium, which is added to your monthly payment. So if you're not putting 20% down, you got to pay insurance. Okay. So because it's a higher risk loan when you put less down. So the lenders require you pay monthly mortgage insurance premium. So that's why you hear 20%. On conventional, you're going to be putting 3% down. On a FHA, it's 3.5%. We're going to work to get you into zero down payment assistance. One of these programs that's going to help lower your costs up front. But now let's talk in the second column here, the closing cost estimate. Anywhere from 2 to 5% when you're talking about 3% down on conventional, 2 to 5% of the home price. So if it's $300,000, you can see already how that adds up. Let's say just on the low end. So you're bringing 3% down on a $300,000 home. That's $9,000 already. Add another 2, just the low end of the closing cost estimate. You're adding another $6,000, right? So you're already at $15,000 for down payment and closing cost. You can see how it adds up. It's just got to remember the closing cost is independent of down payment. It's separate. We are going to work. I'm going to work with your realtor to try and get you seller concessions to pay those closing costs and eliminate as much as possible. So if we're getting down payment assistance and we're getting some seller concessions, it's very possible that you can go to closing with zero required. I have actually had buyers using down payment assisted programs and getting seller concessions where if they paid their 1%, usually your earnest money deposit, when you go under contract, you're going to pay a deposit and it's usually 1%. So on that $300,000 home I was talking about, that's $3,000 that goes to the title company and it's held in an escrow account until you go to closing. All right. I've had buyers on down payment assistance getting some closing costs from the seller that were actually able to get that money back, that $3,000 back at closing. Now, you typically can't get money back at a closing on a home purchase, but Texas allows you to get up to the cost of your earnest money deposit. So it is possible. I've seen it happen. Does it happen all the time? No, but it is possible. So we will just have to negotiate, have a great realtor, negotiate, get some seller concessions, and do everything we can to get you that zero. All right. Now, let's answer some popular questions, the ones we see a lot. What credit score do I need to qualify? There's many, many different programs. I would say on most of the down payment assistance programs, I see most of those being 600 and 620. There are some that go lower. I've seen them as low as 580, 560 on some programs. But don't let your credit score discourage you. I want to take a look at it. I've in many cases, I've been able to help home buyers improve their credit score quickly, 20, 60, 80 points within a week, only by going over it to see what we can do, what quick fixes we can make, adjusting maybe some of your balances on credit cards, fixing some errors on there. Maybe you've got a couple of collections and they're maybe $150. It's not even a lot of money, but it's taking 40 points off of you. We'll pay that thing off and get a letter from them showing you paid it off. You might get 40 points like that. So don't let your credit score discourage you, because we want to get you on a path to home ownership. Maybe it's 3 months, 6 months. Maybe in some cases it's a year, depending on what your credit situation is. But we're going to create a path. We're going to give you detailed instructions what to do to get you into a home. What I don't want you to do is blindly start paying your debts off, paying some debts down, because I see it happen way too often where borrowers will pay things off thinking it's going to help. But actually, sometimes you can pay a debt and it will lower your credit score. You can close an account, it will lower your credit score. So my recommendation is don't do anything that you think is going to help improve your credit until you talk to a professional. I have a way to do that inside your credit profile that doesn't cost you anything. We'll try that first. If it needs more attention than what I'm able to give to it, I will recommend a credit professional at that point. Don't let your credit score discourage you. Let's look at the full picture, get you on a pathway to homeownership. How do you improve your credit score? The number one way, and the number one thing that hurts most people's credit scores, are late payments. You got to pay those bills on time. Okay. Reduce your credit card balances. That's one of the tips that we do. Sometimes you can, if you have some credit cards that are maxed out, but you've had them for several years, you can contact those credit card companies and have them increase your spending limit. And guess what? That creates, it gives you more spending ratio. So you didn't even have to pay anything down, but you got more ratio now. That helps your qualifying ratio, and it didn't cost anything. But that's why I need to look at it. I'll go through it, and then I'll give you a detailed list of what to do to improve your scores to get you where you need to be to get into one of these programs. How much can you afford? That is where we look at your debt, your qualifying debt ratio. That's based on your monthly income, your monthly debts, and adding your new home payment determines that ratio. That is going to let you know how much you can afford. How much down payment do you need? We mentioned that you don't need 20%. We're going to try to get you with zero down. You'll still have some closing costs, but FHA is 3.5%. Conventional is 3%, but we're going to work to eliminate that. Closing costs, as I mentioned, anywhere from 2 to 5% of the loan amount. So keep that in mind, that is an added cost. So that's for taxes, that's for insurance, that's lender fees, title fees, and there will be a complete list on your loan estimate. I'll give you an itemized fee sheet that's going to detail every cost, and I'll do a video and I'll say what each of these costs are, why it's there, who it's getting paid to, so you'll know line by line. You'll know where every dollar you're spending is going and why, so you're making an educated decision when you buy your home. So listen, I'm here to help. I hope you're ready. You're obviously ready because you're here watching this. You have questions. I want to answer your questions. So reach out. You can call, text, email me. But primarily what I'd like you to do is at the end of this webinar is just go to my website. It's my calendar. It's online where you can select a day and a time and for a loan consultation. So go to consultwithbruce.com. That's consultwithbruce.com. Select a day and time, and I'll look forward to meeting you. It'll be 20, maybe 30 minutes. We can do it over Zoom or just over the phone. I'm going to gather information from you to help determine which program will best suit you, and then we'll start taking the next steps. Okay, it's very simple. But here's what we're going to do. It's the next steps. The path to your home ownership. We're going to start that pre-approval process. And we're going to do that by scheduling your free loan consultation at consultwithbruce.com. then we're going to explore the down payment assistance options, see if there's zero down programs available for you. We're going to look at all your details to see what program is the best fit for you. I'm going to show you personalized loan recommendations that you and your spouse, your significant other can look at and make a decision about which one will best fit your needs. So this is what Warren Buffett says. A home is one of the most important assets that most people will ever buy. Homes are also where memories are made, and you want to work with someone you can trust. Now, I've been in the mortgage business since 2016. For 8 years prior to that, I was a realtor. So I've been in this space for a while, and I've learned a lot, and I've been able to help a lot of first-time home buyers. It's my favorite thing to do. I get great joy in helping those of you who feel like maybe it's insurmountable. There's too many roadblocks, all my credit, all my money, everything. Listen, they've created so many different programs out there for all backgrounds. If you're self-employed, if you're a seasonal worker, all sorts of things. And so don't let any of the things you've heard in the past discourage you from taking that first step. Let's see where you're at and let's help you build a plan. All right. So you can go to my website at Gulf Coast Home Loans. You can call or text me at the number here. You can email me at bcline@nexamortgage.com. But again, just go to your phone, pick up your phone right now and type in consultwithbruce.com. Just type it in, consultwithbruce.com, and then select a date and time on there. And I can't wait to talk to you about it. Want to answer your questions, find the right program for you, and just help you get started. So select that time on my calendar. I'll reach out. We can do it over Zoom or we can do it over the phone, whatever works best for you. Thank you again for taking the time. I hope you learned a lot about buying a home and maybe got your questions answered. Look forward to meeting with you. Let's talk soon. Take care.